So we finished last class. We went through quite a few of the sheets, thankfully. So we went through the cash budget, the sales and collections budget, merchandise purchases budget, selling and admin. I'm sorry, we started the cash budget. For the cash budget, we plugged in the beginning balance of cash for April and the quarter. We haven't done that for May and June yet because we have to calculate the ending balance of cash for April to calculate the beginning balance for May. We need to calculate the ending balance for May before we can calculate the beginning balance for June. We went through and we included our cash collections that we're expecting by month, calculated that total cash available. Then we put in all of the cash outflows that we're expecting, our cash disbursements, and we calculated an excess or deficiency of cash. So excess meaning that we have $0 or above in cash, meaning it's a positive number in cash that we're expecting. Deficiency meaning we have a negative cash balance. The last portion of the cash budget is our financing portion. So we're going to go through by month and figure out if we need to borrow money, if we're going to be able to repay any of the principal, and then also showing interest that's incurred and the amount that we're going to pay out and in which month we'll pay the interest. The whole reason is to calculate our ending cash balances for each month. So we need to read some information over here before we can get started on the financing portion. Obviously, if you look at April right now, we're at a deficit of $120,000. We're not even at zero, meaning that we have more cash disbursements in April expected than cash collections. We don't have enough cash in reserves and in collections to cover our disbursements for that month. So we're anticipating that we need to borrow. The company maintains a minimum cash balance of $50,000. So they're required to have at least $50,000 in cash at the end of each month. All borrowing is done at the beginning of the month. Any repayments are made at the end of the month, and this has to do with the interest calculations. The company has an agreement with the bank that allows the company to borrow in increments of $1,000. Sorry, I was just making sure I'm recording. At the beginning of each month. The interest rate on these loans is 1% per month. And for simplicity, we will assume the interest is not compounded. At the end of the quarter, the company would pay the bank all of the accumulated interest on the loan and as much of the loan as possible in increments of $1,000, while still retaining at least $50,000 in cash. So they borrow and repay in increments of $1,000. So if they need $500, they have to borrow $1,000. If they need $1, they need to borrow $1,000. The interest we'll get into next. But if they need to borrow for the month, we're assuming that they borrow at the beginning of that month. So they're borrowing for an entire month. Right here, we have a deficit of $120,000. First, let's think of it. How do we get to zero? How much do I need to borrow just to get to zero for this 1 month?
120,000.
120. So I'm just going to plug this in. We will be hard coding and it's okay. I want you to focus on what happens when you plug in 120,000 here. So under borrowings, it's a cash inflow, so it's positive. Put $120,000. And notice here that the ending cash balance becomes zero, right? So if I borrow 120,000, I will have exactly $0 at the end of April. Have I borrowed enough?
No.
No. How much am I required to have on hand at the end of each month?
$50,000.
50,000. So how much more do I need to borrow?
50,000.
50,000. So with the borrowings portion as well as the repayments portion, you're basically just plugging in numbers to back into the ending cash balance that you need for the most part, especially if you're in a deficit. So at the end of April, we're going to borrow enough so that we have exactly the minimum required balance of $50,000. The borrowings are 170,000. We don't have any repayments. We don't have any interest. So I'm just going to plug in a 0 to each of those because we don't pay interest until the end of the quarter. We won't repay anything until we can afford to repay it. The ending cash balance for April becomes the beginning cash balance for May. So in cell C3, go equals, and then you're going to just equals B18. What we end April with becomes what we start May with. And then push enter. So do you see that? And I'll go backwards. It increases our total cash available as soon as we add in that beginning balance. So now we don't have a deficit in May, right? We have 40,000 as our excess of cash. I'm looking here in cell C12. So right now we're showing an ending balance of 40,000 for the end of May. Do we have enough cash?
No.
No.
Negative.
How much do we need to borrow in May to have an adequate ending balance of cash?
$10,000.
10,000. So we don't have to do any calculations here. We're just going to plug in $10,000. We will not repay anything, so put a 0 in there, and we won't pay any interest yet, so put a 0 in that cell as well. So notice something over here, the quarter is getting updated with the total amount that we borrowed, 180,000. And then right now for repayments and interest, it's also showing the sum of 0 because we haven't repaid anything and we don't have any interest paid yet. Here. For June's beginning balance, what we end May with becomes our beginning balance for June. So equals C18 and cell D3. And then push enter. So before we even added in the beginning balance, we already had excess of cash. Right now, we have to look at this. We have $280,000 as our excess of cash. Do we have enough to pay back all of what we borrowed and pay back our interest and still have our required minimum balance?
Yes.
We do in this case, but if it's not always going to be the case, most companies will probably not have enough to pay it all back, but it's best business practice to pay back as much as you can while still maintaining your minimum required balance. Before you get started on the repayments portion, So obviously we're not borrowing. We have an excess way above 50. So you can put a 0 there. We're going to do the interest calculation first because we're required to pay interest regardless. So down below in cell B21, you're going to write April because you borrowed in April. And then in cell B22, you're going to write May because you borrowed in May. We're going to do our interest calculation. For April, you borrowed at the beginning of April, May, and you paid back at the end of June, so 3 months. For May, you borrowed at the beginning of May, so all of May you paid back in June, the end of June, so 2 months. The amount, we're going to tie it back to our table, our cash budget. So B14 will go in cell D21 for the April borrowings. And then cell C14 will go in D22 for the May borrowings. The interest rate is 1% per month. So just plug in 1. It's already formatted for you with percentage. And the interest paid is multiplying the number of months times the principal, the amount borrowed, times the interest rate. So total interest to be paid for the amount borrowed is $5,300. In cell D16, go equals negative because it's a cash outflow. And link it to F23. Enter. Before you go and just include all of what you borrowed as a repayment, you want to look at that cell here. 274,700 is how much we have left over after repaying the interest. So do we have 180,000 and still able to maintain a $50,000 balance?
Yes.
Yes. If we don't have enough, we would just pay back as much as we could while still maintaining our minimum required balance. And we would have an amount owed, a payable as of the end of that month. Does that make sense? So I'm just going to go like this equals negative 180,000. I'm hard coding it. I'm not summing anything because it's not always going to be the amount that you borrowed. Now, after paying back the loan, paying back the interest, we have a minimum balance, or we have a balance of 94,700 at the end of June. And it will be the same as the minimum, or I'm sorry, as the ending balance for the end of the quarter, because June 30th is the end of the quarter. So I'm just going to highlight this so you see it. These should be the same numbers.
I have a question. So the quarter, it's like the beginning, that cash balance for the quarter is the same as the beginning cash balance for April. And then the ending quarter balance will be the same as the ending month in the quarter.
Yeah, exactly. Questions on the cash budget? Once you get to the cash budget, you've done so much work in the other 3 budgets that it's really easy, and it's just gathering that information. The hardest part is the financing portion. After you complete that cash budget, now you can move on to your budgeted income statement. So we're looking at Earrings Unlimited, the budgeted income statement for the 3 months ended June 30th. So we're not going to show monthly data. We're just showing the quarterly data here. So revenue earned in the quarter, expenses incurred during the quarter. So sales revenue, which budget is this going to come from?
Our sales and cash collections budget.
Yep, our sales budget. So go equals sales and cash collections budget. Sales in dollars, 2.15 million in cell F5, and then push enter. So I already have some of the subtotals in there calculated for you. So it's just going to keep updating as we add more information. Where did we calculate cost of goods sold? Which budget? Merchandise purchases. So remember, we did a separate calculation off to the side. So in cell C6, go equals merchandise purchases and cash payments budget. And in cell H16 is where we had cost of goods sold calculated. And then push enter. So right now you should show a gross margin of 1.29 million. So sales of 2.15 minus cost of goods sold of 860 gives you gross margin. For the selling and administrative expenses, that comes from our selling and admin budget. So equals selling and administrative expense budget. And we want the total selling and admin expenses, not the cash dispersed. So 1.13 in cell E14 is what you're going to link it to. And push enter. Don't worry about the flag. Doesn't matter. Now we have income from operations of 160, gross margin of 1.29 minus the 1.13. Selling and admin expense gives us the income from operations of 160. The last thing that we need to subtract out is our non-operating expenses, which is our income or interest expense rather. And this is going to come from our cash budget. Equals and I'm going to link it down below F23 because of the formatting that I have, the formula that I have. So I want the positive number, not the negative number. So you should show 5,300 is your interest expense. We're subtracting the 5,300 from income from operations of 160 to get net income of 154,700. This is going to be used in the balance sheet to balance out that balance sheet. Specifically for retained earnings. I'm gonna save. Income statement's not too bad, is it?
No, not at all.
No, we just got to do everything else right beforehand.
Yep, you just have to gather the information, and once you gather the information, it's pretty easy to accumulate there. Or the balance sheet, that's the last sheet we're gonna go through. And we need all of the rest of the budgets prepared before we get to the balance sheet. So what I've done is in columns A through C, this is our current balance sheet as of June 30th. And then in columns E and F is the opening balance sheet, because we're going to refer to some of that information. So from that master budget information tab, I just copied it over here so you can see it easier. So the balance sheet is showing us what our asset balances are, liability balances, and our owner's equity balance is as of a specific date, period end. I have an inner and an outer column. Most of the numbers will go in the outer column. So in column C. Column B, we're going to do some calculations. For the ending balance of cash, the cash as of June 30th, we're going to get this information from our cash budget. So in cell C6, go equals cash budget and E18, ending balance of cash at the end of the quarter. And then push enter. So equals cash budget E18, you should see the 94,700. Accounts receivable, we calculated in our cash collections budget. So in cell C7, go equals sales and cash collections. Down at the bottom is where we calculated the amount owed to us, accounts receivable, as of June 30th, 500,000. So in cell C27. And then you're going to push enter. The ending balance of inventory we calculated in our merchandise purchases budget. So go equals merchandise purchases and cash payment. And we calculated it over here in column G in cell G11. We took the number of units we expect to have in ending inventory, 12,000 times the cost basis of $4. And we came up with $48,000. Prepaid insurance is a little bit different. When we establish the prepaid, that's when we pay for that insurance up front. So we debited prepaid insurance, we credited cash at that point in time. That happened in November. as we start using the prepaid insurance, right? As we start incurring the insurance expense each month, we're reducing our prepaid, debiting insurance expense, crediting prepaid insurance, reducing that prepaid. So what we're going to start with is the beginning balance. So that's going to be from our beginning balance sheet for prepaid insurance minus insurance expense for the period. That's going to be the calculation. So in cell C9, go equals cell F9, so 21,000 minus, go to your selling and admin budget, find insurance expense right here, 9,000 in cell E11 and push enter. So 21,000 minus 9,000 used gives us a $12,000 balance prepaid. For property, plant, and equipment, we're going to do a little roll forward here. Property, plant, equipment, net, the beginning balance is what we're going to start with. So it's net of accumulated depreciation already for the prior periods. So equals F10, and that's in cell B10. Push enter. We're going to add in our purchases of property, plant, and equipment. So this came from the beginning balance sheet. Oops. The additions to fixed assets during the period come from our cash budget. So in cell B11, you're going to go equals cash budget. And E9 is where we have our fixed asset purchases. And we're going to push enter. So we're adding in those purchases. The last step is we're subtracting out accumulated depreciation for the quarter. So it's the depreciation expense that we incurred during the quarter. So this is going to be from our selling and admin budget again. Equals selling and admin. Depreciation expense was cell E17. I will use the negative one this time just because of the formatting I have. The formula I'm using. Enter. So what this is doing is it's summing over here, B10 to B12. So it's adding up beginning balance plus the additions. And then since it's a negative for accumulated depreciation, it's subtracting it out to get the balance of property, plant, and equipment net, 964. So my total assets equals 1.618 million.
Professor, for the cash at the very top, I got a different number.
If you check cell E18 in your cash budget, what do you see?
178.7.
Okay, I'll correct it after. So
Okay.
keep following it, you'll just be off.
Okay.
Down below in cell C23, I have a little calculation for you. It's a check figure. Total assets need to equal total liabilities plus stockholders' equity. So at the end, this check figure is going to equal 0. Once we populate liabilities and stockholders' equity. Our balance sheet should balance. For accounts payable. Accounts payable we calculated in our merchandise purchases budget. So in cell C15, go equals merchandise purchases and cash payment. Cell B32, which shows the accounts payable, the amount that we owe as of June 30th, 84,000. Enter. Dividends payable. The information was given in the cash budget, and they said that they declare dividends at the end of the quarter to be paid at the beginning of the next quarter. So we're going to hard code in $15,000. It is not the same amount that's shown in the opening balance sheet. That amount we already paid out. It's a different amount. When we declare the dividend, we debit retained earnings, reducing retained earnings. So I'm just going to go down to cell B20 and go equals negative C16. Because when we establish that dividends payable is when we reduce retained earnings. And then push enter. Did we retire any stock? Did we issue any stock? Did we repurchase any stock during the period? Did anything happen with our stock account? No.
I do not recall, no.
No, if we don't remember anything, nothing happened. So that means that the ending balance from last quarter becomes the same ending balance this quarter. There was no change. So just go equals F17. Enter. For retained earnings, we're going to do the roll forward of retained earnings. Beginning balance retained earnings plus net income minus dividends gives us the ending balance. So in column B, in cell B18, you're going to link it to the beginning balance in F18, 580,000, and push enter. And then, and I'll put it here, beginning balance sheet. For net income, it comes from our income statement equals budgeted income statement C11. Enter. And we balance. Save this. If you don't balance Don't stress. It means that you have a number that needs to be corrected somewhere else, and I'll help you. So what I want you to do is, if you have it 100% correct right now and you're matching me, save and come back in 10 minutes. If you don't, I'm going to help you correct it. So let me just. So what I want you to do now, save again. Just in case you haven't, just save it. Then what I want you to do is go File, Save As. And rename it, write copy or something like that. Change the name because this is going to be the template you're going to use to create your case. And you're going to you're going to zero out the numbers, start fresh, and then you still have a whole copy that you can refer to. Okay? So I'll give you a second there.
It's called like a Chapter 9 template.
Yep. So you have a Chapter 9 template, and then you'll have a copy that you're going to work on. That's your case. I uploaded the case in the chat. I also included an assignment in module 3, so you have it for reference if you lose this. I'll also upload the blank template there too, just in case.
The same case you uploaded in the chat is also under the modules?
Correct.
Okay, thank you.
So you have it to download again if you need it. Sorry, Trevor, I forgot your settings.
It's my weird setting. One day I'll figure it out, maybe, but I'll download it from the Canvas.
Yeah, it's in module 3. So I'll pull it up right now for you so you can see it. Keep saving as, it's okay. Just change my share. Also, during the break, I just shared, I have to get evaluated by 2 of my classes every year. So I chose you guys as one of my classes because I love you.
That's because we're your favorite class, right?
Of course.
Get the best reviews possible.
Have a lot of fun with you guys. So if you guys wouldn't mind doing that, it opens today. You can do it anytime today through November 27th.
How do we go to the, is it under Canvas?
All of it's in announcements, under the announcements in Canvas. It's pretty easy. It's not as easy as giving you a form in class, but it's pretty easy. My online students did it last fall for me, so it worked out. Okay, for your case, it's due November 9th. You have plenty of time. You have the remaining portion of today's class, and you have all of the next class to complete it. And you have more time outside of class if you don't finish it during that period of time. I give it to you during class so that you can practice with me and ask questions. And see, Anthony, you get to do it twice. Basically, what you have to do is exactly what we just did, but with a new case. You're going to be looking at Corona Company. I have a sense of humor. Come on. I can be creative sometimes.
I was curious if you had named that before everything, if it was like you use the same name.
No, it was definitely something I changed.
All the numbers should be in the deficit, right?
Yeah. Thank you, Anthony. Thank you, guys. I'm glad you're enjoying it. You got to get a little humor from this whole situation. You're preparing a budget for the 3 months ended June 30th, 2021. So same 3 months. I tried to make it a little bit easy on you for that. All of the budgets are the same, what we just prepared. So all the sheets are going to be the same. And you're going to be required to use the formulas. So some of the formulas will change, some of the cell references are going to change. But the first thing that you should do is read through this information. I hope that you could do it with group members, but I understand it may not be as easy when you're doing it remotely. So you can work with peers. If you work with peers, you'll have to submit a peer evaluation form, just saying that you both participated, who participated, did what, etc. I'm just going to skip down a bit because on page 2 is where it gets started with all the information for the case. And what you should do is really digest all of the information that's given to you here, because it is given to you in paragraph format. It can kind of get a little bit just kind of all together. Figure out where you're going to be using that information, what it's for. Update certain portions of the Excel file, like here where it gives you all of the forecasted and budgeted unit sales, actual unit sales and the budgeted unit sales. You can update that first sheet, the sales and cash budget, you know, off to the right, how we had that. For the selling and admin budget, you can update that information with the information that's given for this case. And then when you keep going down, there's the opening balance sheet as well that you can update for that first sheet. The names of some of the accounts are different. Just update it, change it to what this company uses. And here's something new that could help you is the check figures. So starting with the second budget, which is the merchandise purchases and cash payments budget sheet, I give you some check figures for April and May. So what your ending balances should equal. And then for several other sheets, you also have ending balances. So you can kind of check to see where you're at. And if you're not there, you can ask questions, etc.
And the check figures are labeled so the same like tabs on Excel. So the second one be the second one, third, and so on.
Correct.
Okay.
Preferably, Chris, too, I would want you to work in pairs. It's not a large group project just because I want you all to get equal time in Excel. If you're going to do it in a group, you can totally do it in Google Sheets. It's probably the easiest. So then you can see as you're updating together. Okay, I'm going to stop.
We can,
oh, sorry.
We can reference, like, if we're working on this like at home for homework, we can kind of reference the previous, like this class video to kind of, if we get stumble along somewhere. Okay.
Absolutely. Yeah. And you can email me too. So there, it is pretty straightforward, but just expect a few little things that are different. But I want you to read through this whole thing. The first page is just telling you about Excel, etc., but you can probably just skip to the second page. Clear out the Excel file that you have as your extra copy so you can start updating it. Any of the blue boxes that we had in our case that we went through in class, you can just delete. You don't need them. But I want you to read through this and ask questions and start working on it. And I will stop talking now.